This pair is awesome. Do you want to understand how to take high probability trades which are safe and can generate great returns? Then bear with me as I'm going to explain you exactly how you can do the same by showing the trade that we just closed. So let's go back a few hours and see the whole trade from beginning to end. Today I'm still on the Australian dollar Japanese yen. We've been recently engaged into another trade and we are still using three indicators: the bottom stop signal, the levels and zones, the RSI Exhaustion. Just the same indicators that we used for this trade, which we had a few days ago. And if you are interested in the analysis of this trade, you find the link in the description down below. We made a video as well. The risk reward was more than 3.19, so we got more than 3x profit on this one. But today we have yet another one, and so let me comment on what's going on here. So the price recently in the last few days has gone up, but at the same time the RSI has gone slightly down, or at least flat. You see it's a slight downward movement in the RSI, but the price is way higher. So it means that we have divergence, and as we always look as a first condition to have divergence, we have one. So we have a significant divergence because the price is going way higher than the RSI, which is actually pretty flat, if not slightly moving to the downside. So the first condition is checked. The second condition that we need to check is to have the RSI exhausted, and in this case we have it as well because it is bullish exhausted, which means that if we are looking for an opportunity to the downside, we want the RSI to be bullish exhausted, like in this case, because it means that the price in this case, if we assume that it will go down, this exhaustion means that it's a confirmation to us, because it means that the price is likely not going any higher because it has a very limited room to go any higher. The last condition, which is the simplest one, is to have a top in this case, because we wanna short this pair. So we have a top here. You should always wait the close of the next candle so that you are sure that the top on the previous candle is confirmed. So in this case, the signal is confirmed, and so we can place an order. In my trading account is already set, and it looks like this. So the entry level is going to be this one. The stop loss is going to be a bit higher than this. If I'm not wrong, this is the stop loss. Yeah, exactly, because we want to give it a bit more room to go somewhat higher if it wants to go higher. But since the analysis that we just made, we assume that it will not go any higher than this from the level it currently is. Regarding the target, well, we might set the target at different levels. If you want to be super aggressive, then I'd say we can go down at least at this major support level here, which is, by the way, the one that is signaled by the levels and zones. So this one is displayed by the levels and zones, and it is a major level because, as you can see, it was tested here, was tested here. It played a very significant role, and when you have this kind of levels, it is very likely that the price will reach in the future, will visit again these major levels. However, to me, it looks like it might be a bit too much in this case, not because I don't trust this level, but because by looking at the most recent price action, I see some structure going on here. And in particular, I'm referring to this level here. Let me draw it for you. This level here, okay? So as you can see here, we have an horizontal line which acted as a support level here, in this case, here, here, and this was kind of a minor, very minor resistance. Then it was a resistance here multiple times in multiple candles. Then kind of here acted as support, support, support. Then this is a support, still a support, and then this a little bit as a resistance. So this level was visited multiple times, quite a lot of time, almost I'd say 10 times in the last like 10 days, 2 weeks, which is a very, very significant consideration that we must do, because if we assume that the price comes down, then the chances that it will touch at least this level are very, very high. And if you want to play safe, if you want to trade safely, then I will definitely set my target here. Of course, it's going to be a lot less than the target all the way down here, which is more aggressive. But if we want to stay, I'm not saying conservative, but realistic in this case, because if you want to stay conservative, you might say, okay, I'll set the target maybe up here or even closer, or take a minimum. For example, my minimum risk reward is 2. So I'd say, okay, I'll set it to 2 and it's fine. 2 is approximately here. It's totally possible, but I'm expecting the price, if it comes down, I'm expecting the price to touch at least this level here, because by looking at the most recent price action, we can clearly see that this level is a level that the price likes to visit a lot. And so we are confident in setting our target here. And by the way, if we get the trade right, we are getting a very, very generous and very interesting risk reward, because it's more than a 5x return, which is absolutely excellent. So the trade looks like this. I just take a little bit to comment on this stop right here, because if we pay a closer attention of what's going on, you might have said, well, this stop looks like an interesting opportunity. Why did you skip the stop and instead you waited for an higher one? Well, let me draw some lines. So it is true that the price went up here, slightly up. From this stop to this stop, we are slightly higher. And at the same time, the RSI dropped. And it dropped kind of like crazy, you see? So you might say, well, we have a very, very significant divergence here. We also have exhaustion and we have a top. So why did you skip the stop? Well, the truth is simple. Because the answer is that this trend line down here on the RSI is wrong. You should not draw a trend line like this, because the correct one is the one above here. Let me explain why. When you want to draw a trend line on the RSI, you always have to start from the most recent highest point, and in this case it's this one. When the RSI was down here, so around this top here, the trend line would have looked like this. See? Because the first point was this one, the starting point, and the second point was this one. This was the second highest point, okay? In this case, the RSI was way lower. And so we didn't have any major reference of the RSI in respect to this trend line. You always want to measure the divergence of the RSI by looking at the correct trend line, and in this case is this one here. So in our case right now, the correct trend line is of course this one, because you have to adjust the fact that you are waiting for a top, so you track the trend, the RSI with the trend line. Now we have the correct trend line set up here, and we got a top. We can see that we have divergence because this goes down, or at least it's flat, and it is at the same time. This happens at the same time of exhaustion and at the same time of a top. So as I said, this trend line here, let me draw once again here, is wrong. It's wrong, because you don't have to start just because you see a downtrend in the RSI and an uptrend in the price doesn't necessarily mean we have divergence, or at least it is true that we have divergence, but it is not the opportunity that we are looking for, because 9 times out of 10 it's not going to be the greatest opportunity, the one with the highest probability, and in fact it turned to be a wrong opportunity. So you always pay attention to draw the trend line correctly on the RSI. Start from the highest point and then pick the second highest point and project the trend line in the future. If you then get a new top and you also have divergence and you also have exhaustion, then you're good to go, because that is the opportunity you were looking for. Okay guys, so let's see if we get the trade and I'll keep you updated. The price is just dropping like crazy, so within one candle we are almost to the target. Of course we are not there yet, but I already moved my stop loss to break even so that I'm totally safe. If the price now comes all the way back up because it decides to skyrocket, then I'm out with a profit and I will not lose any money. It's going to be a tiny profit, but right now I'm on a risk-free trade, and probably we are getting to our target quite soon. I'm assuming this because I can see that not only we had this amazing downward candle, which we can never predict that the price will move like this, or at least this fast, but it's good to see, so it's okay. But I can also see that we now have a major resistance. You see here the red line that appears here. It's a major resistance that it is starting from this point, which means that right now we have something above the current price level, which is pushing the price to the downside. And this is an additional indication that we should reach the target anytime soon, or at least we should definitely reach the target. So in any case, as I said, I'm a break-even, so if it decides to reverse, I'm okay. In the best case scenario, instead, as we discussed previously in the video, we are gonna get more than 5x profit. So guys, let's just be a little bit more patient and see how it moves. And we are now out of the trade, so the trade is closed. The price touched our target, then retraced a little bit, but the trade is over, and we got more than 5x profit. It's actually a 5.15 profit, which is absolutely excellent, even considering the fact that within a few days we got a 5x return here and a more than 3x return on this trade here. So within a few days, two amazing opportunities and two amazing trades. And this happens all the time when you are able to make a clear and simple analysis, because that is the key. If you mess up with your chart and you add too much indicators, or you consider too much stuff, you end up messing up with your chart and you end up messing up with your trades, with your performance, and so with your trading account. Instead, what we do here is that we keep it simple. We make clear and simple analysis using the tools, the indicators that we trust, because they allow us to make this clear and simple analysis. We are using those indicators since many years, and so we have the evidence, the proof in our performance, in our long-term performance. We have the proof that they can definitely support this clear and simple analysis that we make here, and so we are able to isolate only the high probability trades. And as you can see, when you get involved into high probability trades, the chances that you are correct are very high, and the chances that you are wrong are typically very low. If consider, for example, this trade back here. Of course, as I said previously in the video, you find the link in the description if you're interested, but we had so much evidence here that the price was going higher, and by setting the target, it was obvious where to set the target. And in fact, the price reached the target, our target, and then it decided to went past our target. Of course, we cannot predict where the price will ultimately go. Like in this case, we were expecting the price to reach at least this target. We couldn't tell from here where the price would have gone next, because we didn't have any evidence in the indicators, in the price structure, where the price was headed. The only time we had the evidence was when we started the trade, when we made our initial analysis, and the same applies here. So we were able to tell, to define levels, our target and also our stop loss at this specific point in time, because we had plenty of evidence that was saying, okay, the price is going lower, is moving lower, and it will likely reach this level here. At this point, like where we are right now, we can't tell where the price is going to go, so we are just not interested. Who cares where the price will go? We know for sure that if in the next days, in the next weeks, in the next months, or whenever it will come, if we get another opportunity just like this one, just like the previous one that we recently had, then it's gonna be our opportunity. It's gonna be one of those opportunities that are the high probability trades, then where the chances that you are right are extremely high. And when you are able to get involved into those trades, it is definitely true that the overall performance it will be very constant, profitable of course, and constant through an extended period of time. And this is the only way to grow your trading account and be constantly profitable. Okay guys, so the trade is over. Feel free to leave me any comment down below if you have any. If you enjoyed the video, please like it, hit the like button, hit the subscribe button as well if you didn't already. And guys, I'll see you in the next video.